Hey, everybody. All right. It is Chuck Barone on Wednesday, October the 2nd. Man, wow, this year's gone by quick. 2024. It's a fabulous Wednesday. I hope everybody's having a great day. Boy, guys, getting a little loony out there in the world today. A little scary now with this Iran Israel thing, man. This could turn into something very, 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 very ugly. We still got the dock workers strike going, which is going to be a gigantic hemorrhoid here in the United States. You saw it today in the markets, man. The markets have been sizzling hot, right? And all of a sudden, markets not so hot today, although they did manage to squeak out a small rally, but I'm surprised they did because I things look a little scary right now, guys. I mean, anything, just the slightest little thing could set off a downdraft in this market that will knock everybody's socks off. And now the chances of that little something happening keep getting bigger and bigger. Crazy times. Anyway, before I get rambling, let me take a half a second. As always, welcome everybody to the show. Thank everybody for your guys' support. Nice to see everybody on the chat today. We got Wolf back today. Nice to see you, Wolf. Well, we got Donna on today. Hey, Donna. And interesting times we're living in, guys. Interesting times. You saw today was today's day 2 of this strike. I think that now I weighed the war and the strike kind of 50-50. Which one's going to be the one that upsets the apple cart here? But the markets kind of shrugged it off a little bit, managed to gain a little today. So let's look at how the markets did. The Dow managed to gain 39 points, now sitting 42,196, close to record territory. The NASDAQ gains 14 points, 17,925, and the S&P was basically flat. It was up fractionally, but less than 1 point, 5,709 on the S&P. So the big rally kind of had a little breather today, and we're going to see what's going to happen over the next couple of weeks, man. This stuff it's either going to be really great for the market or it's really going to be bad, guys. We'll see. I don't know really how far apart the ports and the port workers are. From what I'm understanding, though, it's pretty big, and what they're asking for is a pretty big ask. So we'll see how it all works out. But the stock market teetering a little bit. Bond market today sells off a little bit, yields rising, not by much, though. The 10-year up 4 basis points, sitting at 3.79%. The 2-year up just 1 basis point, 3.64%. So they're just, at least they don't have that stupid inversion anymore, which usually typically telegraphs a recession coming. This one didn't. It was the longest inversion, maybe in history, in modern times at least. No recession, at least no recession yet. So bond market, meh, not much doing. The dollar surprisingly continues to rally. The dollar up 37 more basis points today, 101.60 on the index. I got to say, guys, I think maybe the dollar reacting to the idea that these rate cuts are likely not going to happen, at least the way the market's having them calculated out. Now, again, everything is so subject to change, guys, because now the market is so subject to the whims and what's happening in the news cycle. I really haven't seen it where earnings didn't really dictate where the market's going. Now, they're still in the lead here, but there's so many other dramas happening that could affect this stuff. It's crazy times. Metals today had a mixed day with gold falling $5.40, $2,663.90 for an ounce of gold. Meantime, silver rallies up 41 cents, $31.82 for an ounce of silver. So silver's consolidation above $30 continuing to do well there. I like what I'm seeing so far. So silver doing well. This little bit of a sell-off in gold technical didn't really mean anything. The gold bull is still running, guys. Oil today rallies up again, up $1.11, $70.94 for a barrel of West Texas Intermediate. It's barely over we feel like oil wants to be between 70 and 75. It's kind of where we've had it pegged for about a year now. And it's pretty much stayed there. It has a couple spikes above and a couple spikes below, but most of the time it's just kind of been right in that little trading, and it is still today, $70.94. Bitcoin today falls again, down $697, now clinging on 60,210. 60,000, as I've been explaining, that's a big number now for Bitcoin. It needs to do what silver is doing. Consolidate and build strength above 60,000. Make that 60,000 a support number that you can bounce off of, not a resistance number you can't get through and stay past, right? So Bitcoin in a little bit of a precarious situation right now. We'll see how it reacts over the rest of this week. It's interesting because Bitcoin has been moving pretty much in tandem with the Dow. And today the Dow managed to gain, but Bitcoin did not. So maybe we're going to start to see a little bit of a divergence there. Interesting. All right. Let's talk about news today because we got a lot of interesting stuff, guys, right? All right. First, market's taking a second as the storm clouds, and I say storm clouds, that's a very, very mild way of putting what's really happening right now. We have two huge events that could quickly blow out of control and turn these markets from bull to bear very, very quickly. The big one, the big port strike, that's now looks like it's, and then we also have the war, but what looks like it's going to be an imminent war now between Israel and Iran. Israel launching rockets directly, or Iran launching rockets from Iran directly into Israel. Israel has promised to retaliate. We'll see what that retaliation looks like. It's going to start a back and forth between these two. We really, really, really don't want that right now, guys. That would be bad. So we'll see where that goes. But it looks like this, truthfully, I've been watching the Middle East for 100 friggin' years. This, I would say, is probably the closest I've seen or can remember to Israel and Iran really having a true out-and-out war. They've been taking pot shots at each other for years and years. Iran using its proxies to cause trouble and be a pain in Israel's ass, right? But this is really a little bit different now, guys. Now we got the two, there's no proxy, even though the proxies are involved, they're pretty weakened right now. So now you got the two main going head to head. That's a little bit different of a scenario, and anything could make that thing spiral out of control. Just the slightest miscalculation could turn that war into a full-scale Middle Eastern disaster, guys. And if that goes on, now you're going to see oil prices spike. You're going to see all kind of crazy stuff happen all around the world. Everybody's going to pick teams, and that really is where then it really starts to get extra scary, because who are Iran's big buddies? Russia and China. Who's Israel's big buddies? The United States and Europe. So you can see the teams being picked here and where this could eventually go. Very, 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 very scary stuff. Now, the port strike, if that lingers, that could also have massive, massive negative consequences. It already has. They're already freaking out because we can't export chicken. The chickens are sitting there. They need to go. This is perishable stuff, right, guys? They got beef imports sitting out there, can't bring them in. They got fruit out there, can't bring it in. This is all perishable stuff. So it's one day into it, it's already starting. And it's only going to continue to get worse. If this thing continues to linger, if it goes on longer than just a week or so, it really will start getting hairy. Now, I understand, they were joking about on the chat today, joking about the union president. I guess he makes $900K a year. Is that true? Really? And he also driving a Bentley. Wow. That's a little different than the union bosses I think of, Jimmy Hoffa and those guys, pretty gruff. But I don't think they ever made that kind of money legitimately. It's outrageous. But this dock worker strike, is a little bit different because this thing could start now really triggering layoffs. Because what will happen is product doesn't get in. Businesses won't have product to sell. So in essence, they're going to be like basically out of business. You'll see layoffs, temporary layoffs at first, start to happen very quickly. What's interesting here, Biden came out today, of course, and sided with the union. Said that the ports, where's the wording here? Came out, sided with the union. He said he pressed the ports to offer a strong and fair contract. Now, what's interesting about this, even though they're asking for a 77% increase in their wages, which is pretty friggin' amazing. Now, they're not asking for that overnight. That's stretched out over a couple of years, but still, that's a pretty big ask. But the real fight here, and the big issue that these guys are fighting over, is automation. So now they have robots. They're starting to develop robots that can do the work these guys do. Well, these guys don't want to leave $100,000. They don't want to lose $100,000 a year jobs. They don't want to lose, union and all the benefits that brings them, right? So now, where does that end, right? Union workers trying to not be replaced by machines. We kind of have that. I guess I'm torn there. I understand the businesses, the ports, if you can automate those jobs, you have a machine that can work 24/7, 365, doesn't need days off, doesn't need holidays, doesn't get sick, doesn't need to sleep, eat, shit, or anything else. And obviously a big upfront expense, but now you lose the payroll, you lose all the tax crap that goes with it and everything else. I can understand why these businesses would want to automate. At the same time, I can understand why these stevedores and these dock workers and these guys working for the ports would not want automation in there. So that I think that if it was just money, they could iron that out pretty quickly. This automation idea now, though, that is going to take some real finesse. And it's going to be interesting to see if there's even the remotest chance of the unions talking the ports out of automating. Ports around the world are already automated, China being the leader, Japan. So it's interesting to see now how this is all going to pan out. And the bad news, guys, is every day this strike lingers, it gets worse and worse and worse for the U.S. economy. It looked like the Fed had engineered this perfect miracle of a soft landing where we were going to actually get through this patch of inflation without a big recession. Well, let me tell you right now, guys, this war, possible World War III, this strike, which basically could upend every single supply chain in the United States. Imagine that, guys. Every single supply chain requires imports. Now, I don't know exactly how I got to admit, I'm no union expert. I'm no expert on ports. So it's interesting to see if these people shipping can reroute these shipments through the Panama Canal or whatever they need to do to get these ports offloaded on the West Coast. I'm not sure exactly if they can do that. I'm not sure if the West Coast, which I'm guessing is also unionized, would feel like that was almost scab work to unload those ships that came around. So this is a very murky, weird kind of deal, man. I just hope they can figure it out and get it done quick, because wouldn't that be just the worst thing ever? They finally got this inflation stopped. Well, not stopped, but we aren't seeing the giant spikes in food and everyday stuff that we were seeing. And this port strike, guys, is the kind of thing that I can't tell you how big the spikes in inflation could be. Because the United States, the way we are now in 2024, we import everything. So if you can't bring stuff in, it's not going to take very long before everything starts breaking down. And once that starts, we saw during the pandemic, Once that starts, it's cascading. And guess what? It's not something you can fix by just telling guys, okay, get back to, manufacture twice as much and get it out there. It just doesn't work. So this, guys, bad, bad, bad stuff brewing. All right, let's move on. OPEC today, it was interesting. It was the Saudi oil minister complaining about OPEC members overproducing, breaking their quotas, screaming bloody murder about it, basically threatening a price war, and said that if these other OPEC nations continue to overproduce, implying Saudi will then overproduce as well, said the price of oil could very well be down to 50 or even below. Well, that's an interesting take by the Saudi oil minister. No, I guess he's just pissed because these nations are, OPEC's known for this. They set these quotas and then they just cheat like crazy, right? So that's interesting. But what's fascinating is we've been talking about oil having a very negative downward kind of bias on prices. Well, here's your confirmation, guys. Here's your confirmation. And the Saudis, if the Saudis start just, drilling and going well over their quota, you very well could see oil prices crash down. Now, I would not complain about that. I would like to get my gas cheap. I would like to have, $3 and change gas again. I got to buy premium fuel, so I always got to pay the big friggin' juice. It sucks. But interesting OPEC. This was always kind of a very loose kind of alliance there. Those countries, none of them like each other. So it's fascinating to see. Looks like a little bit of a fracas coming in OPEC. The ISM shows U.S. manufacturing is still contracting. Came in at 47.2 on the index. Anything under 50 shows manufacturing is contracting. The index showing, this has been 6 months of under 50. It stopped going down at around this 47 number, but it hasn't bounced. So we need that manufacturing number back up over 50. So much for this beautiful, wonderful, perfect soft landing, right? Job turnover slowing down big time, guys. Remember we heard about this quiet quitting and everybody was quitting their jobs and the job turnover was happening really, really crazy. Slowest pace now in 4 years, even though ADP came out today and said it looks like job openings are recovering. ADP is never right on their numbers, and they missed pretty bad last month. So let's see what really comes out on the JOLT report. Let's not believe ADP. Forbes 400 is out, guys. So you see, I love this issue. I read it every year, even though it starts to piss me off now. And I remember the very first issue came out. And I'm old enough to remember that. I think it was about 1984. And at that time, you needed $175 million to get in the Forbes 400. 175 million could get you in the top 400. You know what the number is this year? It's a little higher. $3.3 billion freaking dollars. $3.3 billion to get in the Forbes 400. The collective wealth of these 400 people, the collective wealth, $5.4 trillion freaking dollars, guys. That's a astoundingly large number. Leader, of course, number one on the list, Elon Musk, 244 billion freaking dollars this guy's worth, man. That's a gigantic, massive, holy shit number. Although the Walton heirs, if the Waltons were just one heir instead of three, collectively they're worth over 300 billion freaking dollars. And that doesn't even include the guy who bought the friggin' Broncos, I don't think. Nuts! Anyway, guys, that's it for the day. Interesting times we're living in. I appreciate everybody being here, seeing the chat, cooking along. I didn't have a chance to really read too many of these. Feels good to be back at the office. You notice I got getting back in the fancies a little bit. Anyway, everybody, take care. Have a great night. We'll be back tomorrow to bring you the news you need. Don't forget to hit the thumbs up on the way out, guys. It really helps the algorithms. It helps us get this video out. Our numbers are starting to inch back up. I think people don't understand that the live podcast we do, you can go right to Chuck Barone on YouTube and watch the same one. It's recording and they post it. You just have to go looking under the live ones. It doesn't come up automatically on the feed. Anyway, that's it for the day, guys. Love everybody. Peace out. And we will be back tomorrow. Until then, everybody, take care. Thanks.